Hello, everybody. My name is Lush Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending November 18th, 2022. Looking at the market indexes for the week, the TSX, S&P 500, Dow Jones, Nasdaq, and the Russell 2000 were all down slightly for the week. Oil and gold were down as well. So turning to Canada, on Wednesday morning, we had the CPI reading, and the core month-over-month CPI went up and was higher than expected, and the markets were unhappy about it. The headline CPI was at expectations at 6.9% for the year over year, same as the previous month, while the month over month headline CPI was 0.7% for the month, as expected, but higher than the previous month. So, looking at the numbers, the core CPI, the actual was 6.2%. The forecast was 5.9%, so we were higher, and we were also higher than the previous month. The headline CPI, the year over year for October was 6.9, as I mentioned, which was the same as forecast and also the same as previous months. And the month over month for October was 0.7%, which was the same as forecast, but higher than the previous month. The current inflation rate is still very much above the 2 to 3% the Bank of Canada is targeting, and the last few percentage points will be the toughest. Expectation is another 0.5% rate hike on December the 7th, and perhaps 0.25% following that in 2023, and then a pause. If Canada does enter a recession, it is likely to be more serious than the US recession would be because of the Canadian consumer indebtedness and how closely our real estate market is tied to the overall economy. Turning to the US, on Tuesday, the US Producer Price Index came in lower than expected, up 0.2% month over month, half of what was expected. Year over year was 8%, lower than the 8.3% that was expected. The core producer price index came in at 0 increase month over month, and year over year was 6.7%, much lower than the 7.2% expected. And of course, the markets in the US enjoyed that very much. One of the members of the Fed, Jim Bullard, said on Thursday that the termination rate for the US interest rate hikes might be as high as 7%, which is significantly higher than the 5.5% the US bond market is pricing in today. This would mean the rate hikes would keep going in the US with a higher chance of a serious recession. Home Depot beat on revenue and earnings on Tuesday, showing that the US real estate and housing market is still being invested in. Walmart also beat on revenue and profits, showing health of the US consumer, but consumer spending on discretionary items like electronics was a bit weaker than expected, while consumer staples was fine. US online companies like Google, Amazon, and Facebook had overhired during the COVID days, expecting the trend of everything being online to continue. And during the reopening and switch to services that is happening now, they are having to cut costs and employment. The expected recession is another reason for this. Facebook was the worst at keeping costs low, while Amazon has always been very good at keeping costs low and margins high. Still, Amazon is ready to cut 10,000 jobs, but they have a 1.5 million employees, so that's not significant, although the number could increase in 2023. Investors may see it as a cost-cutting and trimming the fat from the overhiring. Disney is to implement a targeted hiring freeze and looks to cut some jobs as well. Disney shares were up from that announcement. Now on to some miscellaneous thoughts and news. So do note that the central banks are looking at unemployment numbers, and to lower inflation, they need to lower demand, and to lower demand, they need fewer people working and spending. They do actually need to put some people out of work before they start lowering interest rates. The additional costs of rents and real estate ownership in Canada is affecting the amount of money Canadians can spend on other things and slows down the remainder of the economy, says a global ratings agency. Retailers still have excess inventory buildup, especially some things from the summer that arrived late due to the supply chain slowness, and so there are sales happening for Christmas, lowering margins for retailers. Many things in store inventories are so late that people had bought them elsewhere previously and thus need to be discounted. A bystander in the Russian-Ukraine war, Russia struck at Poland with missile fire, causing casualties. This may have been an accident or an error in judgment, and the markets dismissed it, with the exception of commodities, which spiked for a bit and then settled back down. Turning to China, China looks to be easing on its zero COVID policy. Not officially, since they cannot admit being wrong, but they are easing up the number of days one must quarantine, for example, when exposed. This will cause greater consumption, including commodities, for example, and increase their prices, possibly contributing to increasing inflation. On Wednesday, Reuters reported that U.S. auditors had gotten good access to Chinese U.S. listed stocks records or financial books to run the audits and improve transparency that had previously been a sticking point. As a result, the Chinese stocks rebounded, since the likelihood of delisting those Chinese stocks in the US has significantly lessened. Finally, the International Monetary Fund put out a gloomy outlook on the world economic activity. As the chart for 2022 illustrates, where blue is expansion and red is contraction, readings for the growing share of G20 countries have fallen from expansionary territory earlier this year to levels that signal contraction. This is true for both advanced and emerging market economies, showing it is global in nature. Turning to next week, the coming week is shortened by the US Thanksgiving, and the Q3 earnings reporting season is coming to a close. So companies reporting next week: on Monday we have Dell, Tuesday Alimentation Couche-Tard, HP, Baidu, and Best Buy, and on Thursday is Pinduoduo. Economic events next week: on Tuesday we have Canadian housing prices, Wednesday US continuing and initial jobless claims, and US oil inventories. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that in the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.